And today, the government's jobs report is out for January. U.S. employers added 200,000 jobs this month, so that means that paychecks rose at their fastest pace in 8 years. Also today, major companies are expected to release their quarterly earnings, such as Merck and Company and ExxonMobil Corporation. And here to talk with us about what all these numbers mean, we have Roddy from Rockland Trust. Good morning, and thanks so much for being with us.
Good morning. Thank you for having me.
So, first of all, with this jobs report, it does look good, but you're warning not to be overconfident.
Yeah, I mean, this jobs picture has been very strong. It's persisted on for 88 months now. It's had a longevity and a strength and a persistence that we all love. It's like our quarterback Tom Brady. It's been going on for quite a long time. But the reality is we don't want too much strength in our economic reports because it'll get the Federal Reserve raising rates that much faster. And we've seen bond yields really spike over the last 60 days, and that competes with the stock market. So the stock market will take a breather here in the face of higher rates because of the strong economic reports we're seeing.
I see. Okay, we mentioned the quarterly earnings report for major companies coming out, and what do you make of this?
Well, I would say that we were expecting them to be strong. They're actually even stronger than we expected. We've seen double-digit earnings growth now for 3 quarters in a row. The expectation is that could continue through the rest of the year. That should put a floor under any consolidation in the market due to these higher rates I was talking about. But while wages was a big surprise today, they grew 2.9%, which is well above expectations. Productivity has been low. You put that together, and that hurts companies' profits longer out. So you got to be a little bit worried about what those two mixed together do to companies' earnings.
And there have been some question as to whether changes in the tax code have had something to do with the quarterly earnings reports. What do you think is the reason that we're seeing the numbers that we are?
Well, I don't think the tax code's really leaked into the numbers yet because we're looking at fourth quarter 2017, and some of the the payroll reports, its strength didn't include all those one-time bonuses we've been hearing about. But there was some wage increases in 18 states. Minimum wages were raised in January, so that leaked into the number. I just think overall strength and companies looking for workers and having to pay a little bit more.
And just given where we are right now, kind of what do you think you can advise companies and employers regarding just keeping those businesses strong?
Yeah, well, I would say if you're working at these companies, now might be the time to ask for a raise. They're having a hard time finding people to work right now. And I would also say, for companies, they've really got to manage that productivity. They're doing a lot of investing right now, which is good. Those capital expenditures that they're finally starting to do at companies should lead that productivity number up, and that will really help put a little bit of comfort under, if profitability is going to suffer in the future.
Any final thoughts before we let you go?
Go Patriots.
That's a good one. I think we can all get behind that. Well, thank you so much for joining us this morning, Roddy from Rockland Trust. Caitlin, back